The Bitcoin community, there's a raging debate. Which is better, Bitcoin or real estate?
Yeah.
And I think that's the wrong question.
Dude, you know what? This is what got me into it. I was on a space.
Yeah.
A live spaces, and the debate, they had me in it. I was the real estate guy. And the debate was real estate, Bitcoin, or stocks. And I'm like, guys, what about all three of them? Why not have them all? Like, we have figured out how to take our real estate. We're on our fourth fund, about $300 million worth of real estate, and $45 million, almost $50 million worth of Bitcoin. We merged the two together, and the real estate continues to buy Bitcoin every month out of the cash flow. We have best-in-class real estate with best-in-class money, Bitcoin. One's liquid, one's not. One has volatility, one has zero. Like, real estate is so boring. It has a zero volatility.
Right.
Okay, it never has any problems until the debt market has problems. And, you know, one has tremendous liquidity, one doesn't. Most of the people in this room cannot handle liquidity. Like, illiquid would be better for most of the investors here than liquidity.
Why is that?
Because when I'm illiquid, I don't get rid of my investment. I'm like, bro, I'm not getting rid of it.
You hold.
I hold.
Yeah.
And time heals all problems as long as you have enough time, particularly in real estate. And it benefits Bitcoin as well, because if you had 13 years, nobody's lost money.
Yeah.
But the same thing could be said about great real estate. The Vatican is worth more money today, despite the popes come and go, and wars and economies and dollars. The Vatican's still there, and it's bringing in more bank today than it did 1,000 years ago.
Yeah.
So if you can merge the two together and then become a stock, which is what Cardone Capital is going to be. That's why I wore the ad right there. Then I have the best of the real estate, I have the best of the Bitcoin, and I have the best of being on a public company traded on the stock market.
Yeah. So when people try to frame it up that way, they're thinking too linear. Like they're trying to pit two against each other, and they're thinking like, well, which one's going up faster? But it's not about that, right? Because real estate,
it doesn't have to be that unless you're going to have that conversation. You know, what's better, Coke or Pepsi?
Right.
Neither one of them. I mean, they're both terrible for you.
Yeah.
But
with real estate, we get the leverage because we have the loan.
Yeah.
We have tax efficiency because we can depreciate the asset.
Yep.
Right. We get equity principal pay down by somebody else.
You don't get that in Bitcoin.
You don't get that Bitcoin. And then with the
cash flow, you don't
with
get
the
that
tax
in Bitcoin.
efficiency I gain, I get more after-tax dollars to buy more Bitcoin.
That's right.
Right. So
and both benefit from appreciation. Both benefit from the destruction of the U.S. dollar. The real estate benefits from rent growth. That doesn't happen with Bitcoin. So that's what I'm saying. That if you could figure out how to get them both. I had a guy tell me, he's like, Grant, if you'd have taken your $5.2 billion and only owned Bitcoin, you'd be worth $20 billion. Right. I'm like, yeah, what's the point, bro? Like, you're telling me to get rid of a business to have a different business. Like, I don't need to do that. I need to figure out how to merge the two together.
The other thing I like about what your angle is as well, that I'm hearing from you anyway, is that it's also a business that's providing value. Like you're providing homes for people.
Yeah.
And at the end of the day, financial markets are great to make money, but there's not really a lot of value that's being provided there. And so we still need people to provide value to the world, give jobs, provide homes, things like that.
I can't take a Bitcoin only fund public. So like, why would I it doesn't make any sense, but I could take a real estate and Bitcoin, merge them together and become a new product.
Yeah.
I could see in the future, I've already met with Fannie and Freddie, and the head of the FHFA, and said, hey guys, they're going to be a long-term 20-year mortgage product that is Bitcoin and real estate friendly, not a margin call. It could be a long-term, it could be a 30-year mortgage on those two combined, as long as you have cash flow with the two best worlds combined.
Yeah. So can we talk about the deal? So you have a deal that you've recently announced that I believe you're then putting the cash flows into Bitcoin. Is that right?
That's right.
So none of the financing or debt is going into Bitcoin, just the cash flows from the project going into Bitcoin?
We're paying cash for both.
Okay, so you've raised money to go buy a...
No, we
could you
buy
walk
with
me
my
through it?
money.
Okay.
So we buy it off of my balance sheet.
Okay.
So I'll buy, we're doing a deal right now. It's $122 million combined.
Okay.
It's 100 and...
Where is this?
It's Miami, Florida, Miami River. I'll send you the pictures of it.
Okay.
It's 346 units. It's 122 million combined, 107 plus 15 million in Bitcoin. We pay cash for both. We close and we drop it into an LLC structure. So, and I go to my audience and say, would you like to invest in this? They invested the same price I did. all the money comes in, part of the money comes in, or no money comes in. It doesn't matter to me. I'm buying it anyway. And then what we do is we put that in a fund. Now I've done 4 this year. I'm going to do another 8. I'm going to have a total of 12.
Okay.
And then I'm going to take them, merge them together in a public company, and bring it to the market.
But talk to me about.
And then we think we get a double or a triple in the valuation.
So you're buying real estate and Bitcoin together and putting them both together in a fund that then people can invest into.
Yeah.
And so what do you expect for the economics of that fund? So if I'm buying a traditional real estate fund, I'm getting a 8% preferred, maybe I'm getting a 20% IRR. But if I put a Bitcoin kicker in, then I get a much bigger upside
we're
potentially.
Go from what's considered a 15 to 18% internal rate of return to 35 to 45% with zero risk. I mean, as close to zero as you can get. I'm not losing the real estate. I have no mortgage on it. I guess Bitcoin could go to zero, but somewhere down to zero, somebody's buying it.
Yeah.
So I don't know how it gets to zero, but even if it did, I still have my real estate.
Right.
So I have a no loss situation. The cool thing is we're onboarding people that have never considered Bitcoin. They've heard about it, but they haven't bought any because they don't feel like they're buying the Bitcoin. They're buying the real estate that buys their Bitcoin.
Right.